What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. The market was closed today for MLK Day, but we have a lot of news to go over from this weekend. We have some important news with Tesla and the Model Y, and we also have some news with SPCE, and we have a lot of earnings this week. So in this video, we're going to go over the earnings, the news, and the plays we're watching. And at the end of the video, we have a $13 million option, so make sure you guys stick around for that. If you aren't subscribed already, don't forget to subscribe. Tom and I post brand new videos every single day. But with that being said, Tom, let's get right into today's video.
Yeah, CNBC reports that Tesla delivers its first Shanghai Model Y crossovers in China, which is the world's largest EV market, and it's currently very important to Tesla and its growth plans. And the company wants to increase its vehicle sales volume from 500,000 vehicles to 20 million vehicles annually over the next decade. And these are huge numbers as Tesla really tries to increase from 500,000 vehicles delivered to 20 million. And just keep in mind that Tesla's share price is already up to 884 after the split. If they get the 20 million vehicle sales within 1 year, that's an insane number. And just keep in mind that they're going to be doing a lot of fighting with NIO in China over this. And I'm really think that there's going to be a big competitive run to see who can get the larger stronghold in China.
For sure, 500,000 vehicles to 20 million annually over the next decade. Obviously, those are some huge goals, but we've all seen Tesla do some crazy things, and we can just tell by looking at their stock chart.
Yeah, for sure. And I really like their movement, obviously, over the past few years. But I wonder if they will ever start to pull down. A lot of people say that these stocks are just going to go straight up, like Tesla and NIO. And I mean, man, if they start increasing from 500,000 to 20 million, they might go straight up. With all those numbers that we see.
Yeah, I mean, there's just so much hype behind it. I wouldn't be surprised if we see Tesla pull back within the next week or two.
Yeah, me either. And I also think it's kind of setting up that way. And they also have earnings coming up. And really, I mean, I expect them to do pretty good on earnings, but at the same time, you can see back here, their earnings weren't too good, only at 0.76 EPS.
True. So what's this SPCE news?
Yeah, this actually comes from BBC, and it says that 10 payloads were lofted on the same rocket, which was launched under the wing of one of Richard Branson's old 747 jumbo jets. And he said that Sir Richard is hoping to tap into what is a growing market for small and low-cost satellites, and they actually did 10 payloads of different satellites from those jets, and they pretty much launched them from a platform, and he theoretically can send up a spacecraft from anywhere in the world from his jet, which is kind of insane. But in reality, of course, his Virgin Orbit system has to be licensed in the locality where it is used, which is at the moment in Soli, California. But there are well advanced plans to bring the 747s and its rockets to Cornwall in southwest England, for example. But just keep in mind that anything about this guy's planes going correctly or any satellites he sends into space, that's all good news for SPCE, and that could actually send their stock up. But just keep in mind that SPCE is a pretty volatile stock, so you just have to really watch for what the news really does make it do.
Gotcha. And then they have earnings coming up in a couple weeks. So, yeah, I mean, it's definitely a stock to keep on watch. Overall, they're uptrending, which is always good to see. But what are some of the plays for earnings this week, Tom? I know there's a lot.
Yeah, this is actually awesome. On Monday, we have Logitech, which was today actually all by itself after close, and which is kind of strange to see that. But on Tuesday before open, we have Bank of America, Goldman Sachs, Charles Schwab, and Halliburton, which are some huge companies, especially Goldman, Bank of America, and Charles Schwab. That's going to be a really big day for banks. And then on Tuesday after close, we have Netflix, JB Hunt, Interactive Brokers to be the big ones. Wednesday, we have P&G, United Health Group, Morgan Stanley, United during after hours, Discover. On Thursday, we have the Union Pacific, Intel, IBM. That's going to be big for the chip makers whenever Intel and IBM start reporting. And Intel is obviously in a pretty big competitive battle with AMD, so just watch out for that. And then on Friday, we have Ally and Schlumberger, so it's a pretty big week, and also Regions Capital. So there's a lot of big bank stocks this week, and really, I think it's going to be a pretty good start to the earnings kickoff season.
Sounds good. I'm excited to see what the rest of these bank stocks have to say. I mean, I don't expect any of them to kill it because we saw a JP Morgan report and their earnings weren't bad. It's just the stock fell because they were running up so much already in the weeks prior to their earnings release. So
Yeah, and the earnings were actually fantastic. I was actually really surprised to see him actually drop on those earnings.
yeah, I mean, JP Morgan had some great trading numbers, and then Goldman Sachs, I remember, what was that, a couple quarters ago, they reported amazing trading numbers. So I'm curious to see how they performed in this last quarter of 2020. So with that being said, let's get right into our member of the day. Today's member of the day is Go. So Tom and I wanted to give a shout out to Go. He's always asking great questions and is always a positive member of the community. So thank you so much for that. We really appreciate it. So now let's get right into the momentum plays. With the first one, we have AMD to the downside.
Yeah, and AMD has actually been breaking out of some longer term trends, but go ahead and make them fall below 87.50.
All right, and then we have Apple to the downside.
Apple to the downside, make them fall below 126.50, and they were actually running down in after hours.
Sounds good. And then we have Qualcomm to the downside.
Qualcomm, make them go ahead and fall below 156.
All right, so if any of these stocks break below the levels Tom listed, we are eyeing it for a quick day trade. So let's get right into the $13 million option for tomorrow. We are looking at the Apple 130 strike calls that expire on January 22nd, which is this Friday. Looking at Apple, it is the 130 strike calls, which is about $3 out of the money. They have about a week's worth of time, which is not bad, but I would say that they're shorting this. They are $3 out of the money. Apple's kind of trending down. I mean, I know it's kind of hard to tell because it is pretty close to the money and it is a weekly, but I don't know. I mean, time will tell, but I just don't see why someone would buy these options, like $3 out of the money, and it is a weekly too, and Apple's already downtrending. We can see that Apple tried to run up in the middle of the day, or actually in the beginning of the day on Friday, and it just made two lower highs and ended up falling off. It's actually downtrending a little bit in after hours too. So I would think that they are shorting these options.
Yeah, me too. They really broke below that 127 support at the end of the day. And like you said, in after hours. So I'm really going to be watching what they do on Tuesday. And I think that that's going to be a pretty big telltale sign if they shorted these or long these, because that is quite a bit of money into these 13 million.
Yeah, for sure. All right, well, let's get right into our questions from the previous episode. We have H saying, could you guys show us PFB next time? So let's take a look at PFB. We can see that they just had a huge run up back in, what was it, the end of, yeah, you could say the beginning of December. And they just kind of went right back down, and they're just consolidating. Like, they're not really moving too much. I've been eyeing them for the past couple weeks, and they're just not moving at all. So, Tom, do you see any like levels to watch or trend lines or anything like that?
Yeah, I actually see the first support would be right around 36.50, and you can see the stock has hit that quite a few times. And I believe there's going to be a long-term trend here. Well, there sort of is a long-term trend along this bottom trend line. It's not too defined though, so I wouldn't pay it too much attention. But really, the big thing I think is going to be the 36 to 36.50 support that you can see that the stock has really hit around that level a whole bunch of times in the past and actually went up or down right off of there. So hopefully we can see some movement to the upside. They've had a lot of vaccine news and stuff like that coming out. And I think a lot of people really thought that it would push them a lot higher, or that they would hold these highs that they made at least. But you can see that they just came right back down, like you said.
For sure. And with the next question, we have Benjamin saying, what are your favorite hedges against the market right now? Thanks. So it really depends on your overall portfolio. So for example, if you're really focused in tech, or if you're really focused in the S&P 500, you would have different hedges. So like, for example, if you just had a lot of value stocks, or just if your portfolio is mainly the S&P 500, you would consider a hedge like that follows the S&P 500. So like SPY puts, or if you're heavily invested in tech, you might get QQQ puts. So it really depends on your portfolio overall, but some overall hedges that I like are, obviously we have SPY puts, QQQ puts, IWM puts. We also have VIX calls, VXX calls. You could buy the VIX. You could always do like UVXY for very short-term trading, but Overall, I would say probably the best way to go would be SPY puts or like trading the VIX, whether it be calls or just picking up shares of that. But like I said, it really depends on your portfolio. Everyone's portfolio is different, so it's hard to say like a one size fits all hedge. So, Tom, do you have any specific hedges in mind?
Yeah, I mean, to me, like you, just like the ones you said are pretty good. The things I like are like, for example, if I think something's going to happen in the short term, I'll generally get VXX shares or VXX calls and like just hold that over the next couple weeks or something. And I've just been buying some shares off of this $16 support that we've seen on VXX, just in case something happens. Because obviously, whenever you have some value stocks, just like you said, it's a good hedge. And I think that the smart thing is to stick with SPY puts, QQQ puts, and stuff like that with time. If you think the market's going to go down like over the next couple months, because sometimes it's hard to time those downtrends.
Oh yeah, for sure. Like you definitely need time. That's probably the most important thing if you're going to trade an option. Like even if it costs more money, it's most of the time worth it. It's really hard to time that, like Tom said. So time's very important, and I would definitely invest the extra money for that scenario. But with the next question, we have LeBron saying, "What do you think about picking up some Zoom calls for March? Also, what do you think about mRNA in the next couple months?" So for Zoom, I really like it for the long term, but I would rather go with shares rather than options. Zoom has some pretty expensive options, so you can do options. Just make sure you have a quality option. There's no point of buying a super far out of the money Zoom call that has a couple weeks. Like you're gonna want some time. You could get March, that could be good, but I would personally get more time than that. More time, the better. Get as close to the money as possible. Overall, I just think the better way to go right now would be shares with Zoom. And then he was also asking about Moderna. So let's take a look at that one. Yeah, they've been doing very well. Overall, I would probably go with Cheers on this one too. Their IV is pretty high. It's about 71%. So those options are pretty expensive. I think shares would just be the way to go, especially like if you like them for the long term. Obviously, it would just be better to have shares. What do you think?
Yeah, and hopefully the vaccine rollout can help Moderna and Pfizer. And I think that the shares would be the smarter way to go here, especially with the volatility on these. Because like if you buy a call, like let's just say today that expires in 2 weeks or even a month, and then we see a couple big red days like we've seen with these vaccine stocks, then obviously that's going to hurt your options pretty bad, and it's going to be pretty hard to get it to go ahead and recover back to your break even point, or whatever you want to call that. And that's a really big thing to look at with these. Is this, like you said, sometimes shares can just be a little smarter of an option, especially if you like the company overall. Like Moderna has a lot of these vaccines coming out, so hopefully they can hold up in the long term. And yeah, sometimes it's just smarter to get shares just in case Moderna's share price falls a little bit.
All right, sounds good. With the next question, we have V saying, "What do you guys think of AMD calls for February 12th?" So, Tom, what are you seeing?
Yeah, I mean, I think that that's a little soon for AMD, and that's also going to be right after their earnings. So if you bought them now, you would generally be playing them for an earnings play. And just keep in mind that the chances of your earnings play working out on options are pretty low, especially on AMD right now. AMD has been falling. I think they'll have decent earnings though, as people keep buying up their CPUs and GPUs, and it's really getting hard to find them even on the market. It's their new GPUs, which is like the 6900 XT, you can't really even buy that on the marketplace right now. And if you do, it's like way overpriced, and people are price gouging you and putting it up like $200 and stuff like that. So you're really getting price gouged on these AMD things, and I think that that will help them on their earnings. But it just looks like they're in a pretty bad downtrend as of late, especially breaking below that $90 support. And they also got rejected off of that key $100 resistance up there.
With the next question, we have William P saying, "Do you like Amazon or Google at these levels? I need to buy one of them." So they both look like they're at pretty good levels right now. If you're in the scenario where like you have like $3,000 to invest and you don't know which one to invest in, I would just buy like one share of Google and then a half a share of Amazon, and then you can get both of them. So I'm not sure if that's your scenario, but it sounds like you like both of these companies. Obviously, they're very strong. They're doing very well. They're blue chips. So if you're in that scenario, I would just grab half a share of Amazon and then one share of Google. What do you think, Tom?
Yeah, I think that's pretty smart. Obviously, Google can. Both of them are really expensive, so that's a big factor here. So just keep that in mind. But they are good companies, and I think that, like Mike said, just kind of diversify that portfolio, and then you won't have to really worry about it too much.
For sure. So, Tom, do you have any last minute stocks, options, or any insight for the market for tomorrow?
Not really. I'm just going to be watching these big tech stocks like AMD and NVDA. They really look like they've been trending to the downside, like I talked about a few minutes ago, and they really have been the killers over the past year. And we can see that Intel's actually starting to climb up, which is good for them. So I'm just going to be watching a lot of these tech stocks as it looks like Intel's starting to do a little better, while AMD is starting to do a little bit worse, which is pretty interesting to see. And then also Qualcomm. This stock's doing very well around all-time highs, and they could start to pull back as well from this type of news. So I'm just going to be watching that. And then also we have some news with some 5G rollouts that I'm going to be watching as well. But other than that, that's pretty much it for tomorrow. Just the big tech stocks.
Sounds good. Well, thank you for sharing that, and thank you guys so much for watching this video. If you guys want to trade the same options as Tom and I every single day, you can click the Stocked Up Options Alerts link in the description down below. We're doing a quick sale to start off 2021. You can use coupon code at 2021 for about $40 off. We post trades in the middle of the day and swing plays, as well as we have a ton of bots to help us throughout the day. If you guys have any questions on this video, let us know in the comments down below. And if you aren't subscribed already, don't forget to subscribe. Tom and I post brand new videos every single day. But other than that, thanks for watching.